This is Terrence Archer Banks with Information Age Financial Solutions coming to you with an article I read about Robinhood. Robinhood is a trading app that allows you to buy cryptocurrencies and stocks for actually nothing, from zero cost to you, and which stops the slippage cost if you were a trader in that process. And it's coming a little bit more of attention because every video that I've been seeing, if you just watch a YouTube commercial, it's just about someone and telling you can make millions of dollars in stocks. And I usually have a younger millennial showing $50,000 or $60,000, whatever numbers. Again, I'm not exaggerating. I'm just saying that these commercials continuously play when I'm watching a video or something like that. And when I came across this article about Robinhood, it just really piqued my attention, and it's something to know because I didn't know how the app made its money if they're providing a platform where anyone can buy stock or cryptocurrencies without any trading costs. So it's worth paying attention to. I'm going to give the link inside the description. Robinhood Trading Exposed, steal from the poor and give to the ultra rich. As always, titles catch my attention and get me to read on. So I'm going to dive into this one. Tragedy struck fast. On a sunny day early this June, a young college student jumped into an oncoming train. The question he left in his suicide note wasn't tied to any sort of extremist ideology. Instead, he simply asked, how was a 20-year-old with no income able to get assigned almost $1 million worth of leverage? The answer, Robinhood. Free trading services, buyer beware. It was touted as a trading platform to set the level playing field between the Wall Street one percenters and the rest of the world, all thanks to its ease of access and non-existent fees. Robinhood has quickly become the go-to trading platform for a generation of new investors, speculators, and get-rich-quick fans. And the reason why this is such important is because there's a lot of younger people who are buying in this who never traded before. They might be playing Fortnite, and they just move to this trading platform. It's a way to get money. Not knocking that, and we live in an information age where these things are possible, and it's definitely something that's of value. I want to get that aspect. I have nothing negative to say about the platform. I think it provides a great service. But just how I was curious because I said I'd never seen such an uptick in terms of videos, in terms of stocks lately, and that's what really drove me to, dive more into it. And when I came across this article, it really just piqued my attention and explained a lot more things to me. So, digress, but I'm gonna get right back to the article. After spending 5 years getting to 10 million users in the first quarter of 2020 alone, Robin picked up an additional 3 million new users. And this user base is exactly what it's meant to be: young, inexperienced investors looking to get their feet wet in the markets. The median age of a Robinhood user is 30 years old, and half of them have no investing experience whatsoever. The average Robinhood account is worth about $2,000 versus the average E-Trade account at $69,230, and the average Morgan Stanley account at around $900,000. Unfortunately, Robinhood's client base is exactly what it's intended to be. They're accomplishing the exact opposite. The traditional brokerage and banking platforms often have extensive know your client guidelines in place. This shows that they know what their customers can handle when it comes to investing. KYC guidelines to help institutions understand what kind of investments are appropriate to their clients and the kind of market access they should be allowed. While Robinhood asks these same questions when you sign up for an account, it appears that this may have been merely lip service. There's no verification for or follow-up on their end. In other words, college students can sign up for Robinhood accounts and get into options markets without really understanding what they're doing. The options market is, you really need to know what you're doing, especially if you're getting into that particular platform. It's easy to blame the uneducated investors for playing with fire and getting burnt. But at the end of the day, the responsibility lies with Robinhood to ensure that their users are what they say they are. It's the same reason why you get your ID checked when you buy cigarettes or alcohol at the store. Selling alcohol to a minor means fines and jail time. But there's no need for Robinhood to do the same because there aren't any penalties from failing their KYC due diligence. And as long as that stays the case, it continues to be detrimental for them to do so. After all, why would they not want their users to get access to high risk investments they don't understand, like option spreads? Even though trades on Robinhood are commission free, they still make revenue from overflow, and that's a whole other can of worms. Zero commission does not mean zero cost. At the end of the year, Robinhood was fined $1.25 million by the Financial Industry Regulatory Authority (FINRA) for letting its brokers front-run its order flow. What does that mean? How does Robinhood actually make money stealing from the poor to give to the rich? When Robinhood receives orders from its users, it does not send these orders directly to a market exchange. And this one gets really interesting. Instead, it sends them to one of 5 market maker firms who then execute the trades on their behalf. This forms Robinhood's revenue model. These market making firms actually pay Robinhood for the privilege of executing their trades. Interesting. Now hold up a minute. Let's think about this. Why would a company pay to execute trades for someone? Obviously, there has to be something in it for them, or else they'd be getting paid. They wouldn't be getting paid instead. Well, when these companies receive order flow from Robinhood, they getting the best payment of all, information on future trades that will happen. In other words, with this information in hand, these companies can place trades on their own ahead of Robinhood users, also known as front running. Robinhood was fined for failing to ensure that its customers receive best prices for security orders. Though they don't directly admit fault, let's look at the history of some of those brokers in question. Citadel Securities receives over half of Robinhood's total order flow, was fined $22 million by the SEC in 2017 for misleading their clients about how they priced trades. Wolverine Securities, who gets 15% of Robinhood's orders, was fined $1 million in 2015 for failing to prevent insider trading. These are firms that pay Robinhood to place your trades. That's how Robinhood can afford its commission-free business. And as for that fine that FINRA hit them with, what does a $1.25 million fee fine mean to a company valued at $8 billion? Never forget that there's no such thing as a free lunch. Don't feed Robinhood or his merry men. This may go a little too far with that. There's no denying that Robinhood has taken off spectacularly ever since the pandemic outbreak. Definitely, I can imagine that. Especially, as I said, I've never seen so many videos talking about stocks. They have no risk. So, however, don't make the mistake or trying the recent run up in the markets to retail traders of the Robinhood platform like some have. To see how much impact Robinhood has on overall markets, we can turn to a look at the assets under management behind the wheel of this machine. In total, Robinhood has an estimated $30 billion in assets under management across all its users. The U.S. equities market, in contrast, sees an average of $325 billion in dollar volume traded on exchanges every day. If Robinhood was somehow halted or shut down, it's unlikely they would cause a black swan type event that would trigger a collapse in the markets. And more to the point, I don't doubt that will happen anytime soon. FINRA basically slapped them on the wrist just last December. There are plenty of other trading platforms and brokerages out there that provide excellent market access and competitive fee structures. Still, there's no denying that Robinhood provides an easy, accessible platform whose pricing is unmatched. I trade with Robinhood. How do I protect myself? So if you already have trade on Robinhood or don't have access to any other trade platforms, what can you do to minimize your risk? 2 ways. Don't place market orders, place limit orders only. By placing limit orders, execute only the security reaches a specific price, you're removing Robinhood's broker's ability to front run you, i.e. give you the worst price. After all, they can give you a worse price if you tell them exactly what price you want to pay, and really, as an alligator investor, you should never be placing market orders anyway. 2, do your due diligence and make sure you understand each trade before you place it. This goes double for any trade that involves options or other derivatives. This brings us back to a young college student who committed suicide because he found himself $730,000 in debt on his Robinhood account, which is fantastical. As it turns out, the problem with this, he was never actually in that much debt. With the put spread the student was trading that he said he should have canceled out. In the suicide note, what may have happened is that his options were exercised without the underlying securities assigned to his account. Option traders take 1 day to settle. In other words, our student might have seen the debit that resulted from the exercise of the puts he sold without seeing the actual stock in its holdings due to this delay. A user interface error on Robinhood's part, perhaps, but one that had cost the young man his life. There's nothing to worry about in the world right now without adding your investments into the mix. Stay educated and stay safe. Regards, Maren. Fantastic article, Maren Katusin. I just Katusin Research. Just be careful out there. I hate to hear stories like this, but it does explain a lot. And I love the information age because you can get as much information as possible before you do anything. Robinhood still provided a lot of people access and able to do different things they weren't able to do before, which is a great thing about the information age. If this video has been any value to you, please subscribe, leave some comments, hit the like button. And until my next video, I'm out.